So if you're watching this video, you've probably already decided that you want to start selling on Amazon. The problem is, most of the stuff that's out there is already starting to become out of date. Now, a lot has changed since I first started with about £1,000 and a dream to start selling on Amazon. So in today's video, I'm going to be walking you guys through how to go and set up your business, the maths behind the business model, and how to go and find your first product. On top of that, I'm going to be talking about the less glamorous side of the mistakes you see a lot of people make and how to go and avoid them in the first few months. Let's get into the video. So the thing with Amazon is there are many different business models you can go and follow. So what we're going to do is we are going to go through these business models one by one. I'm going to tell you the positives, the negatives, and kind of where you might want to be starting off. So the first business model we're going to be talking about is going to be arbitrage. This is classically your most common starting point. The reasons for this is, one, it means that there's a lot less capital that really has to go into it, and two, because you're not scaling your business too fast at the beginning, you're also going to be kind of lowering the amount of mistakes and as a result the amount of money it might cost you. So what is arbitrage? Arbitrage quite simply is just buying either in person or buying online from a kind of a high street retailer. Maybe you're going to use Boots, for example. What you do is you're going to go and receive those products from whatever retailer, again, or you go and take them back to your house. You're then going to go and put a unique sticker on them. This is basically so that Amazon knows that these are your products, not someone else's products. And then you're going to go and send them into Amazon. Then what's hopefully going to happen is it's going to go and sell on, and you're going to go and take the profit, which is going to be between what you sell the product for and all the Amazon fees. Now, the other business models you might go and see in starter videos is you might go and see people talk about wholesale. You might see people go and talk about private label. Now, the reason a lot of new sellers don't normally do these is because we're talking about 10 grand plus, and if you don't kind of understand the basics of Amazon, these business models could end up costing you a lot of money as you do go and make mistakes. So we're now going to talk about starting your Amazon Seller Central account. What is an Amazon Seller Central account? It's basically an account that lets you go and sell stuff on Amazon. Now, when you set it up, you can go and set it up as a sole trader, or you can go and set it up as a limited company. Again, if you're new to kind of business in general, you're probably going to be setting up as a sole trader. Although if you already have an established company, well, then maybe you want to go and set up under your limited company. I personally started as a sole trader for about a year, and then after a year and a bit, I then moved on to a limited company. So one thing I didn't do quite at the beginning, and I definitely should have, was make a business bank account. Now, why would you want to go make a business bank account from your personal account? Well, it's nice to keep all your transactions separate, one, for when you're doing your accounts, and two, it can also help to see how the cash flow is going in your business. So now we'll talk a little bit about the process of setting up an Amazon Seller Central account. The first thing you do is go and set up a professional account. This is going to cost you £25 before VAT. This is definitely not a corner to cut because the business model doesn't really work if you're not running a professional account. Now, you're going to have your run-of-the-mill sort of deep dive into when setting up an account. So, of course, you're going to have to go and give all your details. But on top of that, you're going to go and give ID and proof of address. Now, once you've done this, you're also then going to potentially have a live call with Amazon. This is just to prove that you're a real person and probably to stop fraud happening on Amazon's side. And once this is all approved, you are good to go. I actually recently did this step with a client, so I know that this step can maybe take about a week. If you're lucky, a little bit shorter. So that is about setting up your account. Now, what we're going to talk about is the maths behind the business model, which really kind of works out if you can make profit and how well your business is going to go and run. So you may wonder, why do we really go into the maths behind the business model? Surely I buy something, I sell it, I make profit. Yep, that is ideally what happens in the end, but you would be very, very surprised at the amount of fees Amazon takes. The reality is a lot of people wouldn't go and buy stuff off you on Amazon if it wasn't for Amazon. So, you know, the next day delivery, the kind of all the products being verified that they're legit. So because of that, Amazon do go and take a hefty fee. So we're going to talk about those fees right now. So the first thing we're going to talk about is a referral fee. Now, this is normally a percentage of the selling price of the product, and it can kind of depend on the price you've listed it for and under what category. Categories, for example, you might have stuff under clothing, which normally has a lower percentage fee Amazon will take in compared to maybe something like beauty. You then have the FBA fee. This is basically the fee that Amazon charges you to go and send it to people. So again, normally the bigger the product, the higher the fee you're going to go and get. Now, of course, you've got the cost that you've gone and bought the product for, but actually some people, when they scale the business, they'll also have a prep fee. What's prep fee? Basically, they'll send their products to a warehouse, they'll go and prepare it for them, put a sticker on it, maybe go and bubble wrap it, and there'll be another fee right there, but not too relevant when you're starting off because you're probably going to be doing a lot of the stuff yourself. Now, again, something that's going to happen down the line, but if you're doing well, it's going to hit you pretty fast, and that is VAT. Once you hit over £90,000 worth of sales revenue in a year, you're then going to have to start paying VAT. Now this sounds like a lot, but you actually don't have to remember all these individual fees, because if you're using Seller AMP SaaS, that actually will go and combine all the fees and basically give you a minimum or maximum you can go and pay for the product if you want to achieve X return on investment or minimum profit kind of per pound. So that's something you don't have to worry about too much, but it's also good to be aware that all this stuff goes into the sort of fees and the money that you don't get back once something does go and sell on. So the next number we're going to be talking about is margin. Now this, in my opinion, is a little bit more awkward to go and calculate, but basically this is a percentage of your sales, which is profit. So for example, if I go and sell £1,000 worth of goods, and let's say in that £1,000 worth of goods I make £200 profit, I'm now working at a 20% margin. Like I said earlier, when you use something like Seller AMP SaaS, you can actually go and set a minimum return of investment and a minimum margin. I normally work around about a minimum 20 to 25%, but if possible, I normally like to try and exceed that by a lot. So how much to go and start with? Now, you see a lot of people maybe saying they're starting with 50 quid or 100 quid. I personally think that's very unrealistic. It sounds great, but it's very unrealistic. Now, what I kind of did was for the first month, I said, I'll give myself £1,000. I'm not that fussed about how much money I make, because what I'd like to do is just try and learn as much as possible. So obviously it's down to you in terms of risk assessment and so on, but £1,000, it's going to make you money slowly, but it's also a good amount to, you know, kind of test the waters and kind of make mistakes with, rather than throwing a lot more. Now, if you kind of want to scale, especially work towards maybe being able to make a income or a livable wage or whatever, then you kind of want to be looking around about 5 to 10,000, because then, you know, if you're working at 20% return on investment, you're going to be making £1,000 to £2,000 per month if you can go and sell all the stock you go and buy. So now we've talked about how profit works and all the fees. So how are we going to go and find products? Well, these got two main ways at the beginning, and that is retail arbitrage and online arbitrage. What is the difference? You're doing it in person or you're doing it online. Now, why would you maybe want to do one over the other? Well, obviously with retail arbitrage, you can go and buy, you know, £5 worth of items, £10 worth of items, take it home and then go and start getting it listed. But if you're obviously doing online, a lot of places normally have a minimum £30 order, normally a minimum £50 order. And if you're working with 1,000, well, you know, you're chipping into your total money you can work with a lot faster. The best way to look at it is retail arbitrage will probably take you more time, but you're going to have a lot less competition, because of course, you know, you're buying it in person. If you're looking at clearances, you're probably not going to get the same clearances in London as you are in Manchester. Obviously, online is normally available everywhere over the country, and because it's normally available everywhere over the country, you're normally going to see a fair bit more competition. Also, there is normally a lot more stock online of clearances than there is in person. So there's two massive pieces of software when it comes to analyzing deals, and that is Keeper and it is Seller AMP SaaS. Now we're on Keeper right here. Now, what is Keeper used for? Keeper is more used to seeing what the history has been, whereas Seller AMP SaaS is more showing you, you know, right now. So what I could tell from Keeper right here is I could see that the product, when the green line drops, it basically means that a product has sold. So we can see right here, the green line there has dropped, so the product has sold. So I can see it's selling at 19. But if I go and look up here where it's selling at £40, I can also see it's dropping. So what conclusion I can come to here is I can say, well, it sells when it's 19, it sells when it's 40. I could potentially go and buy it for 19 because it does go and sell at 40. But what I can also go and see from this graph is that it actually is sitting at 19 a lot more than 40. So if I do go and buy it 19 to try and sell for 40, well, then I might be waiting a month or two, which isn't so ideal. So what Seller AMP SaaS does, like we talked about earlier, how you can just go and throw in numbers and it will go and work stuff out for you, is if I want to go and put on the sale price of £40 and I say I'm going to go and source it for £19, what it will do is it will work up the max cost I can pay to receive a minimum 20% return on investment, because I've set that myself, but it'll show me the profit, it'll show me the return on investment, and it'll also give me a rough idea of what the sales are. So again, a little bit more of a snapshot, but not giving you the history of the selling. And this is what the vast majority of sellers are going to go and use to analyze if something's worth buying or not. Something I can also go and show you is how many sellers, because, you know, let's say 13 are selling and you go, oh, well, it's great, I'll buy 13. But if there's 13 other people trying to sell, well, then actually now you're only going to get one sale if they're all being competitive. So we can see right here, actually, a lot of these are FBM. What's FBM? Well, that's basically fulfilled by merchant. That basically means that they are sending it maybe via Every, maybe they're going to send it via Yodel or UPS, but Amazon or selling something FBA is normally a lot more preferred, because you can kind of receive it next day. So if these were FBA, what we'd do is we'd count up how many sellers. We can see 11, and then we go and divide the amount of sales by the sellers. So we'd go 13 sales, divide that by 11. That basically means each person is going to get one sale each if they're all being competitive within the buy box. Now, you might have done all this, but now you're going to come across a massive, and I can't stress how big this hurdle is, massive hurdle, and that is ungating. Ungating is basically Amazon saying, you selling legit stuff? And you going, yeah, here's an invoice, I'm selling legit stuff. Because Amazon obviously don't want fakes on their website because their website is very reputable. So what normally happens is a product might require 10, it might require 100. There's even products you just can't sell on Amazon, for example, Apple. And what they'll say is okay, in order to be able to go and sell this, we want you to give us an invoice, including address, your company name, product details. We want an invoice of 10, and if you give us a good enough invoice, we'll say yes. Now, something to bear in mind is they'll actually reject a lot of invoices. Sometimes you'll give them exactly what they want and they'll reject it. You've just got to stay very, very persistent, and you've also got to make sure that you have all the information that they require. Otherwise, again, you can expect to see them being rejected and not being able to unlock it. This is something that I would recommend checking every single product, what it takes to be able to sell it, and if you can provide an invoice of 10. Some products you don't have to provide any invoice whatsoever. I check them all, what the availability is to go and sell them before you even go and buy them. And you can do that by going to the Add a Product under the Seller Central menu. Now, at the beginning, you are likely to go and make a lot of mistakes. The reality is. In fact, even when you've kind of built your business and become more experienced, one thing that a lot of people end up making a mistake of is going too deep. I had this great bit of advice at the beginning of my Amazon journey, and it was to go wide, not deep. What does this mean? This means go and buy, 5 or 10 different products rather than buying 50 of one. Because I've in the past bought, I'm onto an absolute goldmine. Bought, probably about 50, bought way too many. And then what happened is I bought 50 and everyone else went, oh, that is a great deal. They bought 50 and then it just got absolutely tanked. Which is why if you want to go, going wide over deep is great, because if I had 10 different products and bought 5 of each, it's unlikely that all 10 are going to get tanked. But if I'm just buying one, well then, I'm kind of fighting with fire. If it does well, brilliant. But especially at the beginning, you are likely to make a lot of mistakes. So going wide over deep is always heavily advised. So now, ideally, you've gone and bought yourself a wide variety of products. Now we need to talk about what you need to do before you can actually go and send them into Amazon and make that profit. So you need to go and create a shipment. This is basically create a box, put labels on items and send them in. So there are loads of different things you're going to need. One thing I heavily recommended is a thermal printer. A thermal printer is going to allow you to go and print off small little barcodes, which you're going to go and put onto your products that basically let Amazon know that those are your products, not someone else's. And then, of course, you're going to need it for the label or the shipping label printer. These are basically, you're going to put 2 of these on your boxes once you've put all your products in a box. And one is going to be for a collection, and the other is going to be that Amazon knows that this is your box of goods. Other stuff that's really important to have as well is a lot of sellotape. I probably go for about 1 of these every day, if not every other day. On top of that, you're going to want to have boxes if you're not already receiving boxes from ordering products in. Bubble wrap is also really useful to have. On top of that, cellophane bags. So this is a cellophane bag. It is basically a product or something that I might go and put a product in if it might leak, or it's something I just sometimes put maybe more expensive products in, like jewelry, to maybe look a little bit more professional, rather than being able to send in a box and it go and get scuffed by Amazon. Because the way you got to realize is, yeah, you might be sending it in quite nicely wrapped. But once Amazon receive it, they are hurling that across the warehouse. And as a result, as much protection you can give for your products, the better. Now, it needs to be noted, if kind of prepping your own products sounds like absolute hell to you, well, what a lot of people do is they scale up enough and actually outsource the prep to something called a prep center. We referred to it earlier, but what this is going to do is it normally does go and increase your fees. So especially at the beginning, it's great to try and understand the whole process and also lower those fees, so then you can kind of understand more products that sell on well. So you've bought your product. It's a lovely, profitable product. It's now on Amazon. Now, the last thing we need to go and talk about is understanding how profitable your business actually is, because I've said there are so many numbers just here and there. So what you now need to do is understand how all these numbers piece together to, again, understand if your products are profitable and how profitable your overall business is. Now, almost every single Amazon seller at the beginning will make a spreadsheet. I even had a brand new client and they were just making a spreadsheet. They're making a spreadsheet of what they're buying, how much it cost them, what they're selling it for. But the problem is, that's great, but you have to understand all of the fees that are coming with selling. Again, you could buy some for a tenner, sell it for 20 quid. You'd be very, very surprised of how much money leaks between the 10 and the 20 because of all the fees. Now, you can try and pull all this information and figures from individual reports from Amazon, but it will take you absolutely ages, and good luck finding absolutely every fee with every item throughout the whole process. In fact, what normally ends up happening is a lot of sellers will think that they're profitable or they're maybe holding closer to break even at the beginning, but actually when they look at the real numbers, they're actually losing money. And this is why it's really important to track your profit properly from day one. It's really important to keep on top of your cost of goods the day you go and send it in, or even the day you buy it, rather than trying to reconcile all this right at the end. You also want to be using a first in, first out method in terms of working out profit. This basically means if I went and bought 5 goods at 10, and then if I went and bought another 5 goods at 15, it means that the first 5 that sell have the £10 associated, but the second 5 that sell have the 15 associated with it. What this basically means is maybe if fees went up, or again the price you're selling for went down, it allows you to understand that maybe the second lot weren't as profitable, whereas a lot of new sellers will keep the 10 and they'll forget that they moved to 15, and as a result they'll end up selling a product for a loss even though initially it was a profit. And this is one of the reasons why people use SellerToolKit, because it shows actual profit, not estimations or guesses. And don't get me started on reimbursements. Basically, reimbursements come from how Amazon mess up between you sending in the product and the product ending at the seller, or even sometimes when it gets returned. Because Amazon, believe it or not, don't always come back to you and say, oh, we owe you a bit of money because we messed up. Half the time you have to go and chase it yourself. And SellerToolKit actually have a feature. Not only do they have a feature, they actually have a free extension included that will automate all of these reimbursements for you. What you're going to do is click a button and let those cases be created. And a lot of SellerToolKit users will find that this reconciliation will actually cover the whole price of their SellerToolKit membership itself. So that's everything you have to know about starting a brand new Amazon FBA account in 2026. So let's go through it quickly again. Focus on learning. Small buys, small mistakes, but learning is valuable. And from that, you need to repeat what works and try and avoid what didn't. Next, don't ever stop sourcing. Sourcing is one of the most important skills, so consistently be working at it no matter when. And finally, try and reinvest all that money. As soon as you start taking money out, you're going to probably stop seeing your business grow, so try and reinvest as much as possible. So if you are going to do Amazon FBA properly, the main thing to try and get important from the start is the numbers, and that's what SellerToolKit does. It'll handle your cost of goods properly. It'll also go and show you your profit, not your revenue. On top of that, it'll also go and hunt down all those reimbursements Amazon owes you. So make sure to click on the top link in the description for a 14 free-day trial of SellerToolKit. Thank you very much for watching, and we'll see you in the next one.